Hello traders, Gary Wagner here. It is Wednesday, the 26th of September, little bit after 11 in Honolulu, making it a little bit after 5 in New York. And this is the daily report for gold and silver. Well off of the lows once again today. We do have the precious metals markets under pressure, although silver's been very resilient and is actually moving up on the day. As you can see, current print 1752.06. That puts it down approximately $7 to $8 on the day. The low was 1735 and change and a high of 1767. As you can see here, silver has really moved up off of the lows. 34.09 to 34 and change 02, as you can see, is the current print, with 33.99 and 34.09 bid-ask spread. That puts it up about 25 cents on the day, with a high of 34.17 and a low of 33.24. Traders, I want to change it up a little bit this morning. We're going to start with silver. As you know, we have stops in the futures plays in both markets, gold and silver. The gold stop was hit. We pulled tremendous profits out of the market. We'll talk about that in a second. In silver, though, if you recall, our stops are sitting 34.20 or below, 33.20, excuse me, and the low was 33.24. As you can see, when we look at the fib retracement lines that I have, you can see that one of them comes to 33.25. That's right here. And you can see that's pretty much where the market hit its low in this area. Will this market drift lower? Well, one can never tell, but I will say that there's been a big play on silver that we haven't seen in a while. And unlike previous rallies in the precious metals markets where gold would really lead the way, silver would tend to follow along. In this case, you have had the market diverge in that silver is in its own glory, as well as being able to ride on the back of gold. And so because of that, you've got a much more resilient market in here. As you can see, we're not stopped out of the market. Market has moved up roughly almost $1.80 off of that point and is currently trading higher on the day. Now, traders, gold is a little bit different. We had our stop below 1750, and then I had said to put it very tight to 1750 because I was expecting some sort of a dip, some sort of a corrective action, and the beginning of really a wave 2 correction. Now, with the market as strong as it is, and with the scenarios that are brewing right now in the European Union and other factors, of course, QE3 figuring in a big way, we could easily see corrective actions in these markets to be subtle, quick, and not very deep, a very shallow correction. We had a low today of 1735. And as you can see, when we look at a very short term Fibonacci retracement, and I'm looking at it from the point in which it actually broke out, but I am hitting the low here up to this current high, and the current high that I'm pegging, I believe, is 1788. When we go ahead and plot that, our first level in terms of a resistance or support area for a Fibonacci retracement would be 23%. Of course, that's 1732. You can see that. Typically, you're going to get a little bit stronger of a correction, but with the fundamental factor so strong, it could go either way. We'll have to play this very tight. I will monitor the market over the next few days, and we will determine, was this a very short correction and we have now seen the market really revamp and turn around, or are we looking at the beginning of a real corrective stage? And if that's the case, we will begin to plot various places that this market could go to. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.